Hi, this is Dan Collins coming to you live from Traders Expo, New York. Joining me is Matt Weller, Senior Market Analyst at Forex.com and a contributor to themoneyshow.com.
Absolutely.
Matt, really good time to be looking at Forex markets, isn't it?
Yeah, there's always a lot going on, isn't there? We have a number of major storylines. It's actually for anyone who watches this later, it's what, 2 o'clock on March 12th. There's a Brexit vote going on right now.
Brexit vote 2 or 3?
Yeah, right. Yeah. Well, depending on how it goes, we might get another one Wednesday, another one Thursday. So a lot going on that front. We have the U.S.-China trade war. I think will become more prominent as we go forward. The Federal Reserve, central banks all over the place. So there's really a lot of storylines to track.
Yeah, I mean, you talked about a secondary Brexit vote, but isn't it time for another rumor about the U.S.-China trade war being over?
Yeah, they've just been constant, haven't they?
It's been at least 2 days.
Yeah, so it's really trying to, it's like reading tea leaves, isn't it? You hear positive talk from one side, and then on the other, the latest talk as I'm speaking right now was a bit what I would call negative. China's President Xi is a little reticent to come out all the way to Miami to meet President Trump because he's worried there might be some last minute changes to the deal that aren't acceptable, and then he would look weak if he were to come back without a deal. So they're working on ironing that out. My personal opinion is that all it takes to make a deal is a will to make a deal, right? The details can be ironed out, and I think some recent comments we've seen from President Trump suggest he's almost ready to close the book, declare victory on this U.S.-China trade thing, and then actually move forward to looking at trade with Europe and beyond.
Is that positive or negative for the market, though?
It's a good question. I think it's positive. It's very cynical, but we've seen this with negotiations with South Korea, and we especially saw it with the renegotiation of NAFTA. Not much ultimately changed, but President Trump kind of came in like a bull in a china shop and imposed tariffs and declared victory eventually and settled on a deal that was about the same. So I think we might see a similar thing happen here between the U.S. and China, and that's something that's top of mind for a lot of traders. So I think it'd be positive for risk sentiment, positive for currencies like the Australian and New Zealand dollar, and it might even be a good thing for the U.S. dollar, which is one of the higher yielders among the majors now.
Really? Well, I mean, some could think that the market might feel a little bit like Charlie Brown with the ball being taken away from him.
It's certainly a risk. Yeah, we'll see. Might end up with egg on my face if it falls apart, but that's the way we're leaning right now.
Well, but you think, I mean, the question is that if a deal is made that doesn't do anything, it gets us back to square one before tariffs were imposed, is that ultimately good, or has there been so much built up into a deal that when there's no progress at all, that people could see that as very negative?
I mean, I'm not a real geopolitical analyst per se. I don't have opinions. Certainly, I think that there are some legitimate points. My personal opinion is that imposing tariffs is kind of cutting off your nose to spite your face. So I do think there are some long-term changes that could be made to increase trade over the long run and help risk assets, but I don't think we're going to see those. And I think just the removal of the tariffs and assuming we see it and free trade from there would be a near-term bullish catalyst. But you raised some good points there about long-term risks.
Well, traders hate tariffs, right? And we had a pretty good economy going before this kind of threw a monkey wrench in it. So back to square one was a pretty good place.
Yeah, right. Yeah, we'd love to be back there. We just got a very poor jobs report in the U.S. Might be some distortions around the government shutdown, another big theme we've seen. But in a lot of that high-frequency economic data, we're seeing some signs that the tariffs are starting to take a bite. So I think the removal of that headwind could be a bullish catalyst if we see it.
All right, thanks, Matt. We're going to take a quick break here at Traders Expo New York, but we'll be back in a few minutes with more talk on Forex.